Testing 1 2 3. All right. Testing 1 2 3. All right. That's why we test the sound. So, good thing I caught that one quick, though. I'm getting better. So, let's jump in now. This video, people say, my daily dose of hopium. Why Bitcoin is only going to go up. I'm going to roll out the thesis as to why. We're going to go through the halving, the laws of supply and demand, and the halving is fast approaching, and people know about it much more than they did before. Even media, mainstream media that is typically publishing garbage, know about it too. And it'll be a critical moment for this market. And if you're feeling like you don't have enough exposure to Bitcoin, this is your reality check. And even though the halving has a diminishing effect after each cycle, or does it, we'll tuck into that too. Sorry, a little lag there on the sound. But Bitcoin's monetary policy is working perfectly, unlike the ones in all our governments. And by the way, 92.25% of all Bitcoin is out there. The terminal supply is coming close because 92.2% is already in circulation. And with the upcoming halving, this will reinforce the idea of apolitical money and highlight Bitcoin's unique digital scarcity. I say the hardest asset on earth. So let's go. Historical event is coming up. And let's look at some history too. And disclaimer, well, you know, it's edutainment. And I just got a question on Discord within Patreon, and it was so interesting. A young man, a young student, asking for tips on how to help focus. So this gave me the idea of burying things in this video that you need to find to help you all focus and not be distracted with nonsense. So Chris time for the show. And the story revolves around 4 key themes. The question is, can you find all 4 in this story? This is the visual representation of this show's themes. So you'll see. Well, I don't need to say what they are. You should be able to figure out what they are. But let me know in the comments below if you can find them all. So this is going to be a really good test of how humans can focus, because humans are so distracted nowadays. But this is the time to focus, and I can't stress that enough. So let's look at the Bitcoin halving cycles. Again, we all know it's a nice illustration from Bitcoin Magazine Pro. Big thank you to Sanjay for sharing with me. And this was the inspiration for this video. And it's coming up in less than a year, the halving. And the exact date, I think, is going to be April 14th, 2024. I just have a feeling about that. However, it does depend on the amount of hash power that joins or leaves the network, as this impacts the speed at which blocks are found. Now, estimates, as I said, April 14th, 2024. Some people believe it could be in May. Either way, plus or minus 2 weeks from that date. The block subsidy will be reduced from 6.25 to 3.125 Bitcoin. That is cut in half. And if demand for Bitcoin stays the same or increases while the supply is reduced, the price will go up. Now, if the demand for Bitcoin goes up more than it is, and the supply is cut in half, the price will go up parabolically. And this has been observed in the previous cycles. And that is the key thing here. Now, what I did with this chart is I added a couple of arcs just to give you some perspective. And literally, there's more and more people coming into this place. And the demand is higher, and the supply is becoming scarcer. So if the laws of supply and demand work, price will go up. And I'm very confident it will a lot. So let's look at the previous cycles. So I added blue arcs to represent exactly where we are. So we have the old cycles. 2017 is in blue. 2013 in blue. 2017 in orange. And the current one we are in green. Now this is the time since the last halving. Okay, normally I do it at the time since all-time high, etc. But this is a kind of a new angle. Now I painted in a little blue arc to show what happened in 2013. Basically, from the all-time low to where we are, it just went up. The orange cycle, which is probably the closest analog to where we are today, how it went up, but how it went up twice and how it went down is kind of a little different because C19 did impact some stuff. And then where we are today, it's still very early. The price will be somewhere where I put that green question mark. And remember, the left is on the log scale, the index performance, so take that into account. And if anybody is really smart, a really good test to see if you can calculate what the price would be based on this log chart if the price is where the question mark is. And this is exciting and it's fascinating. And it's 11 months out, give or take, 11 and a half months. Stephen Weston, good on you, sir. No Solana in this video, I'm afraid. But appreciate you. But this is super, super, super exciting. Let's talk about a whole bunch more. What halving looks like. Here, again, those same arcs, the blue and the orange, I put in this chart so you have another visual representation of exactly what happens. Literally, almost the moment you cut the supply in half, the price, the impact, the shock to the system, and how it goes up. Again, 2020 was a little bit disrupted because you know why. In fact, 2020 was a glorious time for me. You've heard that story before, so I won't dwell on that. Now let's dig a little bit forward. Let's look at the long-term holders because these folks ain't letting go. And I'm wondering, is Mike in the audience? His name is actually long-term holder. But supply versus demand-driven price escalation in run-up to and after halving events. What happens? So the primary thesis is that the halving leads to a demand-driven event in Bitcoin, as we know, as the market participants become acutely aware of Bitcoin's digital scarcity. This leads to a rapid phase of exchange rate appreciation, and this hypothesis is somewhat divergent from the main narrative, which is that a supply-driven event instigates the exponential increase in price because the miners earn fewer Bitcoin for the same amount of energy to expend and therefore put less selling pressure on the market. Think about that. But when you look at the long-term holders here, they just grow and grow and grow. Now, let's go back to miners for a second. This is the miner net position change. And we know long-term holders are the ones setting the floor in the bear market, but they are also the ones setting the tops in the bull markets. And I'll explain why in the next slide. But many people look to the halving supply shock as what drives the increase in price. And with miners earning fewer coins while still needing to sell some in order to pay their bills that have remained the same cost in dollar terms or the local currency terms. This is the key here. And many people forget that the cost, the overhead they have to pay, it remains the same despite their reward becoming halved. And this is very important to look at the miner net position change overlaid with the Bitcoin price and see the impact of their accumulation and selling. A positive, this is so important everybody, a positive miner net position change indicates that the Bitcoin miners are accumulating Bitcoin, while a negative miner net position change indicates the Bitcoin miners are selling Bitcoin. A sustained positive miner net position change is a bullish signal for the market. And we're getting a little bit of that right now, which is a bullish signal as well, because the miners know they're trying to mine as much of this stuff as possible. They know what's coming. They know they have 11 months and change to get there. And the question is, what do they do with their coins? Because they're going to need to stock away a few to be able to pay their bills after the halving, or else they may not be able to survive. That is so important. In addition, this is the miner net position versus the long-term holder net position delta. Okay, it's a chart I don't think I've ever shared before, and again, thank you to the team at Glassnode for this chart. Long-term Bitcoin holders are the least likely to sell their coins, and they currently hold a majority of the supply. And these are the people who bought and held Bitcoin when the price was down by as much as 80%. They did not care. They held through the worst storms, the worst black swans, you name it, all the stuff that happened last year. Nope, they're not selling. And that is represented here. Now, the halving reinforces the fact that Bitcoin's supply is inelastic, meaning that it does not change in response to changes in demand. And as more people learn about Bitcoin's superior monetary properties, the demand for it will increase, and this is what this show is all about. However, the supply will remain the same, which will drive up the price exponentially, many believe. The price of Bitcoin will only crash from a feverish high if a large share of the long-term holders sell a significant portion of their coins. So what does that look like? It is so critical to see. Let's talk about one thing before. There are some other big bag holders before we get to what happens to the long-term holders. This is the US government holdings, by the way, from Will Clemente. He estimates that the US government does have 205,514 Bitcoin, worth about $6 billion. And Reflexivity Research, put this together. Now, the question is, they got it all through seizures, i.e. taking other people's coins, but what will they do with it next? And that could have an impact on price. So it's not only up only all the time. Of course, there's huge deviations and fluctuations, and this could be a big factor as well as we go forward. So wouldn't it be great, maybe summer 2023, to snag some cheap Bitcoin if these guys dumped a big truckload at the same time? That would be funny. In addition, the Bitcoin run that we've seen so far this year, and it's been a huge run, has been driven by a rotation of stablecoins into Bitcoin. Okay, that's one of the little Easter eggs there for you all to discover. And again, the huge bump from 20K to 29K was this actual rotation. You can see it very clearly from the chart here. And the stable coins and exchanges are approaching $20 billion worth. And that is coincidentally the same level as April 2021. That was the first time Bitcoin reached a new all-time high of about 67K. And then it hit it again, 69K in November, but that was more contrived. The true all-time high, literally on a basket of currency basis, was April 2021. And that's a very, very important date to know. In addition, other proof that the stablecoins are rotating into Bitcoin. Here you can see the balances on exchanges going down, and they've been flowing into Bitcoin primarily, which is a good sign. Now, let's get back to miner revenue per terahash, and then we get into more details about adoption and how to play this game. Miner revenue per terahash is a metric that measures the amount of revenue that Bitcoin miners generate per unit of hash power, i.e. divided total revenue generated by Bitcoin miners by the total hash power of the Bitcoin network. And that is key. The more profitable, the higher it is, the more profitable it is to mine Bitcoin. And miner revenue in the Bitcoin ecosystem and the halving will likely have the largest impact on miners, who will see yet another brutally competitive 50% reduction in revenue from the block reward. In Bitcoin terms, miners' revenue per marginal unit of the hash continues to decline, with each subsequent halving lowering the amount of this by exactly a half. And remember, the question is, they still have their fees to pay, etc. So what will happen? Many people believe, including myself, price follows the hash. Hash is going parabolic right now. Price is sort of following, but nowhere near the rate of the growth in hash rate. So let's watch this very carefully. In addition, let's look at the drawdown from all-time highs and see how they stacked up historically. So I took this chart from Glassnode again, and I added some pink line and some pink arrows. Now, as you can see, not only do we have diminishing returns in Bitcoin, but we also have diminishing drawdowns. They're getting shallower and shallower, which is good. So back in the early days, in 2012, it was like nearly 90%. 2015, it was about 85%. 2019, it was about 80%. And this time, 76%, 77%. So I showed this before, but this is the refreshed model because it includes 2023 data. And you can see where the bottom clearly was and where the price goes after the bottom. So if you look at the black line as the price and look at the pink arrow that I popped in, what happens after that pink arrow? Price goes up. The question is, and I'm fascinated by this, and I'm so excited for the next 12 months because people know much more about the halving now than ever before. Okay? And there's much more demand, and there's much less supply. There's much more long-term holders. This thing could pop like we've never seen before. So somebody wrote a tweet saying, somebody said, oh, Bitcoin could hit $120,000 in the next cycle. And everybody's like, oh, that's the most bearish thing I've ever heard. Just think of being able to buy a Bitcoin for $15,000 a couple of months ago and then going to 120. That's, 9x, which is insane. But that's the world we live in, and this is an insane asset. Let's look at more. This is kind of back to the long-term holders, and this ties into the whole scarcity. And looking at the bigger picture, supply continues to tighten. Right now, 54% of the Bitcoin supply has not moved in 2 or more years. At a minimum, these entities held from the mania of spring 2021 down to 30,000. That summer back up to 69,000 in November, and then all the way down to 15,500. And again, these people did not sell. Another view of this too is the long-term Bitcoin holders. They are very, very confident in this asset. And this is evident by the fact that a large percentage, again, has not moved in 1, 2, or 3 years. The 1 year is the 3 years is the blue. The 1 year is the dark blue or black, and the 2 years is the dark blue or black and the combo. And of course, the 1 year is the red. And those all combined make up a big stack of Bitcoin. So it's about 67.02% of the total. Remember, 53.39% has not moved in 2 years. 40% has not moved in 3 years. And these metrics are not perfect, but they do show that a significant amount of the total supply is held by people who have no plan to sell their coins anytime soon. And this is a very bullish sign for Bitcoin. And it suggests a very strong demand for the asset. We'll talk more about adoption real soon. But this is probably the most important chart to show. And it's actually very tragic to see how people operate. So you have, probably due to all the negative sentiment on Twitter and negativity and bearishness all over the place, but you have situations where if you look at this chart, just let me explain. The black line, of course, is the Bitcoin price action. The red line is when the short-term holders come in and buy Bitcoin. You can see they start buying it more and more as the price goes higher and higher. And as the price goes higher and higher, the long-term holders sell. Okay, super, super interesting. And then they accumulate back up immediately after the price falls. And I'll show you another chart that illustrates that. But look at this. Not only do the short-term holders buy at the top, but they also sell at the bottom, which is just very, very tragic. So I hope none of this audience did that, because that is not what you do in markets. You do not buy high and sell low. You buy low and you sell high. Okay, very important. This illustrates exactly that. But there's a really cool finding from this chart as well. Not only do, when there is that frenzied top, not only do the long-term holders sell a little bit at the top, but they buy it right back after the first dip. So you'll see here, when the purple piece goes down, that's their selling action. They sell pretty fast, but they buy it back immediately. So if you look at what happened in 2021 as the most recent case, they refill their bags and more within a couple of months of the top. And then they've been stacking again in early 2023. And I've been showing you all the cohorts, all the on-chain stuff as well. But the speed at which they refill their bags, the long-term holders, let me try to explain this, they really hesitate getting off the train, okay? But when they get off, they get right back on at the next stop. And that is a very important thing. And that only occurred to me after I saw this purple chart. So, super interesting, and sorry if I'm getting too excited. Now, let's look at the cohort view. What has happened since 2019? This is also very interesting. This is a simplified version of cohorts from Glassnode. You see the balance in green, that is less than or greater than 0.01 Bitcoin, and then the purple greater than 0.1. The teal color is greater than 1 Bitcoin, and the dark purple is balance greater than 10. It's kind of like everybody else. If you go back to 2019 to today, those with greater than 10 Bitcoin hold the exact same amount of Bitcoin. It hasn't gone down, it hasn't gone up. There was a fluctuation. But all the Bitcoin that has been mined since 2019 has fallen into the hands of people with less than 10 Bitcoin, which is awesome. So that means it's more widely distributed, which is cool. It's another simplistic chart as to what's going on. I'd love to see an overlay, actually, of long-term holders and these lines from Glassnode. If you're listening, that would be a cool view. Anyway, let's just talk about one basic thing. What the story is about is Bitcoin adoption is up, only up, however you want to say it. And the global adoption only has one direction. Let me walk you through a quick tour of planet Earth, and I'm going to point out a few countries that are kind of fascinating as well. And let me know in the audience if you're in any of these countries. First of all, top countries with crypto adoption. This is from Statista. And Bitcoin global adoption, again, it only has one direction. If you go back to 2019 to today, it's up only. Look at Nigeria, from 28% to 42%. Turkey, 20% to 47%. Indonesia, 11% to 29%. That's 3x. Brazil, 18 to 28. India, 8 to 27. India has been on the rise like crazy. Argentina, 16 to 26. I would have expected more from Argentina considering their situation. But they were early adopters too. So it's very hard to go from a 16 to at 26, but it's easy to go from 8 to 27, or maybe different in the other place like Malaysia, Saudi Arabia, South Africa, Switzerland. Switzerland is in there, a very crypto-friendly country. South Korea, Egypt. I'll talk about another one at the very end. But let's jump into part 2 of this survey. And there was between 2 and 12,000 people surveyed in each country for this. And it's quite stunning. Netherlands, we know the Dutch are crazy about their crypto. Even on a Friday night when they're normally out partying, they could be watching this video. Pakistan, 6 to 18, a 3x. Australia, the Australians and the Kiwis are crazy for it too. Ireland, 8 to 16. United States, 5 to 16. Wow, that's interesting. The US was slow to adopt in 2019 compared to many other countries, but it's catching up as well. We have Poland there as well. Russia, 9 to 14. We'll talk more about Russia towards the end. And many, many other places. I do want to point out Japan. Japan is where a lot of this all started a long time ago. 2019, 3% adoption. Today, 6% adoption. It's fallen from 13 to 6. So maybe they're enjoying too much of that money printing, easy money, and they don't care about security because the government has their back. Watch out, Japan. If anybody from Japan, I know I don't have many Japanese or Korean followers, but this is alarming for me. And in addition, these are the lists where 2023 data is not complete. But you'll see every single country, with the exception of Japan, is on the rise. And that's stunning. Now, the countries with top crypto penetration. And remember, there is a whole set of common factors with these countries, and we'll talk about them in a second. Number 1, Vietnam. Number 2, Nigeria. Number 3, India. Number 4, Pakistan. 5, Ukraine. 6, Philippines. 7, Kenya. 8, Indonesia. Then Morocco and Nepal. Now, I always try and find patterns. What do all these countries have in common? I bet you it's an interesting list. So here, first of all, they're all emerging markets. They all have large populations. They all have young populations, unlike many of the Western world and Japan, China, etc. They all have high rates of internet and smartphone penetration, i.e. they're digital natives. And finally, the most important thing, they all have governments that are unitary. And that's a weird word. Unitary governments tend to be more susceptible to centralization and abuse of power. Don't we like that, everybody? No, we don't. And they also tend to be less responsive to the needs of local communities. And they can be difficult to change or reform. So when you have a government structure like that, you want no part of it. You want to build your own future. Hence, Bitcoin and crypto are popular in these countries. My conclusion, could be wrong, but that's what I think. So after all that, need a drink of water. Conclusion, first of all, the world is realizing now that our friend Saifedean Ammous always says fiat debased at 14%, and humans now understand that. As a case in point, 30% is the new 3%. 3% is what people always wanted in terms of a salary raise. Now, all over the world, in fact, it's just a coincidence I did a quick Google search for 30% because I've been seeing a lot in everything that I read. But the Daily Mail covered LA School District, asked for 30% raise for teachers, and they got it because of strikes. And I did forecast in 2023 there'll be a lot more strikes and civil unrest. Doctors in the United Kingdom demand 30% pay rise and warn NHS of hospital pickets. And I can only shudder to think what happens when doctors and nurses are picketing outside a hospital when there are patients in care. And of course, junior doctor pay rise demands of 30% are unrealistic, but they go on strike. So again, the average inflation raise is not 3% anymore, but in places where salaries have been suppressed, it's 30%. Okay? And that shows you a reflection of how much inflation eats into people's paychecks. So remember, if somebody's paying you 3% raise for the year, don't accept it. No, of course, don't threaten your job or anything else, but push back. Anyway, share this slide and these articles, or do a quick Google search for what unions and all these other groups are having. In addition, CBDCs, we talk about them a lot here in this channel, they are fiat on steroids, and they scare the hell out of people into finding new hard money. Else it will be the monetary highway to hell. I should make that into a song by AC/DC, if anybody's old enough to remember who they are. And in other news as well, remember this guy? You know, I'm not going to get political, but Putin is done selling his precious energy for fiat. He does not want US dollars and euros anymore for his oil and gas and all that other good stuff. He's also educating his friends in Brazil, India, Saudi Arabia, etc., not to do this. Don't play the game anymore. While they have to share their precious resources for fiat that can be debased at the flick of a switch. He wants hard assets for hard assets, or rubles he'll take as well. He's also mining Bitcoin, which you found out a couple of weeks ago. And the day Russia and Iran turn on the, trading something like oil for Bitcoin will be the day that things go completely bonkers. Anyway, not saying that day will come true, but if it does, or a version of it, we are off to the races. Okay, the final thing. Did anybody find the quiz? The elements. The point is the world needs hardness. Adoption is going through the roof. The halving is coming. Price will go up. The question is by how much? Again, some ultra bears think 120K is too much. Some people are still expecting their $12,000 Bitcoin, $11,500 Bitcoin, $9,000 Bitcoin, $3,500 Bitcoin. But with this data I just shared with you, it's not happening. Long-term holders are not selling. They know where this is going. Miners are beginning to accumulate, make it even scarcer. And we all know what's going to happen April 14th, 2024. So with that, everybody, time is running out. The event is technically just around the corner. We know how fast time goes. I just started this off by being here Friday a week ago. Feels like yesterday. There's less than 53,000 Bitcoin blocks left. Make sure you get some. It's going to be fun. Even if it is a nothing burger, even if Bitcoin only 3x's back to 70K, it will still be insane. But people and data points to a lot more. Again, demand increasing, supply tightening fast, long-term holders not selling. This could be, not singing hopium, but this could be the craziest bull run we have ever seen. So with that, everybody, hope you solved the quiz. If you didn't, drop a comment below. And if you like those quizzes too, because it's very important for us to be focused, especially on things like this as we go forward. So big thank you to the mods in chat. Big thank you to Stephen Winston. Let me see. Stephen Weston, thank you so much for being here. TD, Tesla, K8, everybody else. Fun time, fun video. I enjoy making these videos, and they actually make me even more bullish. So see you all tomorrow for the quickie in the morning. Bye.